Now, look, there'll be no surprise that household and consumer sentiment has plunged as the talk of higher interest rates took hold in the past month. The Westpac Melbourne Institute consumer sentiment fell 2.6% in February. More than 80% of consumers think there are more rate rises to come this year. Now, oddly, despite fears of more rate hikes, the sentiment about home prices is at a 15-year high. Now, a little earlier, I spoke with Westpac's head of Australian macro forecasting, Matthew Hassan.
I think the surprise here is that it's held up reasonably well. A 2.6% decline, that's to be expected given the surveys in the field during an RBA rate hike. Previous rate hikes, the average reaction's been about a 4% decline. Obviously, that depends on circumstances at the time, and I think the key thing this time around is it was widely expected. Consumers knew most expected rates to move higher this year, and there was a pretty clear warning from the RBA.
Okay, so does that tell me then that consumers need more rate hikes to dampen down their enthusiasm? In other words, if they're not so, sort of down in the dumps about this rate hike that the Reserve Bank has handed out, does that imply that more might be needed?
It might if you felt like the consumer needed to really slow down abruptly. I think it's a matter of judgment. I think what we're getting from the consumer sentiment reaction is an understanding that the RBA is not on the full-blown inflation war path that it was in 2022-23 when we had inflation running at 8%. But it's in for a long inflation fight to bring us back to sub 3%, 2.5% inflation over a long period. So consumers are sort of bracing themselves for more, but they're not really panicking at this stage. Now, the question is, how much of a slowdown do we need to bring inflation from 3 to 3.5% back to below 3%? Our view is that 2 rate hikes should do the job, and that the inflation is fundamentally less threatening than it was back in 2022-23. But there'll be different opinions, and how much of a slowdown is really dependent on how you're assessing that inflation threat.
Okay, so is it troubling for the outlook of interest rates that the consumer expectations of home prices are at 15-year highs? Because obviously that also is inflationary.
Look, that would be a little unsettling. We know that housing markets regained momentum into year-end. Sydney, Melbourne sort of softened a little bit after the change in inflation interest rate conditions. And there has been quite a pickup in investor activity. And so if this was the sign that investors were really starting to click into gear in a way that was quite disruptive, that would be unsettling for the RBA and for regulators more generally. That's a big effort, though. I think we're getting mixed signals on the housing market. So from this survey, we saw, yes, price expectations hitting a 15-year high. I think that's keying off what we've seen with momentum, particularly in those hot markets, Brisbane, Adelaide and Perth, especially, where price expectations are particularly strong. But around time to buy, which is a very important signal for owner-occupied demand, we saw a material weakening. In fact, that index, that sub-index, time to buy dwelling, is down 14% from its most recent peak, and it's at 84. That's really weak. So it's telling us that, as far as the owner-occupier is concerned, this is this is a non-starter, this market, at these prices and these interest rates. Even where we've seen some boosts from the first home buyer guarantee scheme late last year to younger age cohorts, that positivity has faded a fair bit. It's still slightly positive, but I think we're getting some mixed signals about exactly where the market's heading this year. If it takes the bullish course and investors really click into gear, yes, I think the RBA sees that as a broader signal that the economy's firing a little bit too strongly compared to where they'd like to see it. I think more generally it really comes back to how you diagnose the inflation challenge. Is this like a really threatening chronic disease that we've got with inflation that requires multiple doses and a cold turkey response from the central bank, or is this just a light relapse that we can get back under control with?
I'll tell you what, always good to have you in the program. Many thanks for your input today, Matthew Hassan.
Thanks.